Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. So traders, in this video, I want to talk about the SPY, Dow Jones, and so on and so forth. But don't look at that. I want to talk about the markets just recently closed here today. And I want to share with you the developments that's been happening right now on the charts because it's really interesting what I'm seeing right now on the charts. And it's the momentum is definitely shifting right now as we speak underneath our surface, underneath our feet. Now, what do I mean by that? Momentum is shifting. When you look at the market, right, the market has different, what we call the strength. It's a thing called a strength in move. All right. So what is that? A strength in move is essentially where, you know, where you got to see where is the strength. If you have the market goes up, the market goes down, the market goes sideways. Okay. So where is the strength in those moves? So if I look at back over here, right, I can see how the market went up here, right? So the market went up there. That's a pretty strong upward leg on the buyers, right? It's not sideways, not like we're getting right now. I'll get to that in a minute, right? And then guess what? We had a bit of a pullback. So see, notice how pretty much these buying legs have been pretty strong, right? They haven't been weak and sideways and not really much happening and all that sort of stuff. Makes sense? So what we're looking at right now, we're seeing how we've got these strong buyers, and notice how these pullbacks here, right? Look at this pullback, very weak pullback. Oh, we had a bit more of a stronger pullback, didn't we? But the buyers are a lot stronger than the sellers here. Now, notice one thing here. Notice this buying leg. Notice how the buyers have just gone from strong here, right? Strong like bull, strong like bull, strong like bull, weak like duck. I don't know, weak like duck. What else, guys? Put a comment below. Weak like what? Right? So see how the tune is actually changing right now, right? It's more like rounding, right? So it's a rounding formation, and possibly, just possibly, what we're seeing right now is, let me do this here. Go to 1 year. Let's go to year to date. Possibly what we're seeing here is what? Is a shoulder, head, and a shoulder formation. Now, this is actually looking pretty scary right now. And the reason why is because notice how see how it's rounding here right now, okay? Now, this is, guys, I'm not saying this is definitely going to break down. No one knows. What I am saying is there's a massive caution bell based on this here. And the caution bell is that if we start to break below this 285 level on the SPY, then that would be a massive, no, not massive warning, massive sign that we are about to see a significant move on the downside because we've been going up and up and up and up and up, and we're slowing them. And think about it as a train, right? It goes up and up and up, and then it's going strong, and then it starts to slow, and then it slows, and it slows, and then it falls off a cliff, right? It's how the markets work, right? You see how it's gone from strong to weak to like falling off a cliff. And that's what happens a lot of times when you get these sort of rounding. See how it's sort of rounding. We're not getting strong. We're not continuing getting strong, big. It's not a very big, strong, like this sort of formation. I mean, like a very big, strong market in there. So that's what I'm looking at there right now, guys. It's looking really, now this is, guys, when I talk about the SPY right now, so I'm talking about the SPY right now, okay, and the Dow Jones and all the indices are pretty much the same thing, okay? I'm talking about that. This has nothing to do with the individual stocks, okay? This has nothing to do with the individual stocks. What I'm talking about here is the SPY, because the individual stocks look, a lot of the stocks in the S&P 500 look nothing like the S&P 500. In fact, there's about 20-30% of the stocks today actually making all-time new highs in the big bull markets and so on and so forth, right? So never make the assumption that just because the S&P 500, right? Or actually not, let me just do this here. Here's the S&P 500, all right? Looking pretty weak. If I bring up the S&P 500 index and I change it from here to here, right? Look at this one here. This one here. Look at this one here. So EQIX, this is a stock in the S&P 500. Right, all-time new high. Look at this one here, right? All-time new highs. So what I'm saying here is just because the S&P 500 is looking weak, but do not make a decision to buy or sell a stock based on what the S&P 500 are doing, even though it's in the S&P 500. Okay, this is a stock market. It's a market of stocks. It's not saying, well, the S&P 500 looks weak, so therefore the whole market is going to crash or the whole market's going to go down. No. as the S&P 500, Dow Jones, all that sort of stuff have been slowing and possibly topping out, we're getting a lot of stocks that are ripping up. So when I talk about the S&P, when I talk about these sort of things, guys, it has only to do with the market that you are looking at. Do not make the mistake that when you're trading the markets that exactly what I'm saying here, right? Because every single stock is in its own cycle, in its own different phases, price and time, relaxing, accelerating, so on and so forth, right? Overextended and so on and so forth. So as you can see, right, as you go through these lists here, look at this one here, MLM, NEE, RE, MKTX. As you can see, right, a lot of these stocks here, like this one here, just almost made a new high. STZ, right? So you can see what I'm saying here. So when you are trading and you've got your plan, make a decision based on that stock. If that stock meets your plan, I don't give a shit what the S&P or the 500 are doing, because it has nothing to do with, if the S&P 500 has a down day, it doesn't mean all the stocks are going to have a down day. Make sense? In fact, as you can see, right, there's been plenty of stocks here that's had S&P 500 was down almost 1%. It said Dow Jones was almost down 1%, but you're getting a lot of stocks that are up 3, 4, 5% as well too. Now, yes, majority of the stocks there's going to be a good amount of stocks. When we have a big down day, there's going to be there's going to be a large amount of stocks that are going to be down with the S&P 500. Yes, but you can never predict that. What you can do is that you're still going to have a good, say, 20, 30% of the stocks that are going to do the complete opposite what the S&P 500 is doing, because the S&P 500 is just that. It's just a barometer of the index, right? It's not all the stocks, and then therefore you're gonna get a portion of the stocks that look nothing like the S&P 500. Just like I've talked about today, they're making all-time new highs, or they're very big, strong markets, where the S&P 500 is topping out, even though those stocks that I've shared with you today are in the S&P 500. Hey traders, before you go, make sure you head on down to johnsfreegift.com, because I'm giving away a brand new trading course. It's 10 videos long, over 12 hours long. We've got the foundations, we've got chart reading strategies, we've got a couple of different trading systems there, the mindset, the differences between people who do really well and people who don't do well, and so much more. If you're struggling with your trading right now, then you need to get access to this trading course. So go to johnsfreegift.com right now to get free access to this complete trading course right now.